Yo, what's going on, fellas? This is part two of Pathway to Profitability, also with the mental reset and market psychology in depth. I'm going to be going in detail, more in depth of the phases that I was mentioning from part one. So, guys, we're going to be breaking down the phases and talk a little bit about, some behaviors that one has during these phases and how to escape them and how to rewire your mind to start making decisions to change the outcome of your trading. So, the introduction to psychology. Understand this, that trading is 80% mindset and 20% technical, right? To be able to get the information you need to, like the indicators and such, candlesticks, you know, um, uh, chart patterns and such. It's very easy to, read a book and look at all the patterns and stuff like that. And to be able to know, right, what's a head and shoulders, what's bull flag, bear flag, and such, and um, all this information, right? To be able to retain this is pretty easy. But the thing is, when you're in front of the charts and you're in a position, the majority of the times you're not reading a whole book and trying to see if this is a good trade. This is all based off of your mindset. This is like reaction. This is not too much of predicting, but it's just about what's going on in your mind, as you're about to get in the trade or while you're watching, the market move. So understand that it's 80% mindset and 20% technical. Emotional control creates consistency. Now, the objective is not to eliminate emotions, but to dominate them. Because when we allow emotions to dictate, our decisions in the markets, a lot of the times, if our emotions are not good, which majority of the time they fluctuate, just like the market does, there's good moments, there's bad moments. So, especially in these situations where a lot of people tend to either get in with bigger size and, not really get in positions appropriately, your emotions are going to be really high and they're going to cause you to make decisions that you might not be proud of afterwards. So, understand that if you allow yourself to put yourself in positions where you can control your emotions, right, then that'll give you the ability to actually have consistency in the market. Most losses come from psychology, not strategy. All right, so a lot of your fattest losses that you've ever gotten before, the majority of the time it's not because it was under my key level, my trade got invalidated. No, it's because you held the trade all the way to zero, right? Why? Because you didn't want to lose. So that's a psychological issue. That's a mental issue. That's that's an emotional decision right there. So that's a that's an important thing to understand is that majority of your losses they come from psychology, not strategy. So this is the objective: is to be able to dominate these emotions and put ourselves in a position to make decisions to not, you know, have these or not to not make decisions where we're so vulnerable to, awaken these emotions such as fear, greed, and much more. So the phase one, which I mentioned, was this is not in order, but this is a phase that every trader goes through. It either happens at the beginning or later on in their journey, but it happens at some point. And phase one is euphoria, right? Euphoria is the winning streak confidence. Every trade that you get in, it's just a winning trade. You hit 100%, 50%, 200%. You're you're banking, all right. Oversized, you're going in with size because you know the market. You know the market before you know what's gonna happen before even the market opens. So it just gives you this great confidence because you don't lose, right? You ignore your rules, you don't care because you're right. All right, all your trades go in your favor. Feeling unstoppable, and this, fellas, is the most dangerous phase because it's a ticking time bomb before you lose a big portion of your portfolio in one single day or in a short time frame or get liquidated. All right. So you have to be very careful if you're in this phase. All right. Especially when you don't have much experience in the markets or you don't have a lot of emotional control. These are the consequences of in the euphoria phase, right? At the end of this, there could be large losses, blown accounts, delusion of skill. You'll think that you're better than you actually are, and overconfidence replaces discipline. All right, so understand that to embrace this phase is not a very good thing because it can put you in the position where you think that you know All your decisions are, concrete, and nobody's going to tell you otherwise because of the wins. And that's going to make you ignore, proper, you know, uh, decisions that come from discipline and knowing when to trade, when not to trade, when to exit and not enter. So that's a very important thing to understand there, fellas, is the consequences of euphoria if you're embracing this phase. Okay, and phase two is the guiding moment. Now, the guiding moment is a phase that tends to happen after the euphoria phase, right? Um, Actually, around the failure phase is when this actually happens. Because after the euphoria, most of the times people start to enter in the failure phase, which we're gonna go over. But I'm gonna go really quick over the guiding moment. So this guiding moment is when the market starts to make sense, levels and patterns click, patience improves, right? Confidence becomes controlled, and risk becomes intentional, right? So you know exactly what you're putting on the table. You know exactly when you're going to stop out. You know exactly the amount you're going to lose if the trade goes against you. You already have everything set up in a very organized way, and your mindset is sharp, and you're starting to respect your levels and zones and A plus setups. All right, so that's the guiding moment phase, and this is the phase that we're gonna uh, mention that happens before the guiding moment most of the times, and also before the rebuild phase. And this is failure. All right. So failure, guys, is a phase that a lot of us go through. Uh, Many traders go through. Many traders are actually still in. And they're still trading. They're still showing up, but they're just stuck in this phase here, this failure phase. You get these drawdown hits, confidence drops, emotional trading increases, hesitation and revenge setups, and feeling lost and frustrated. I understand this very well. I've been in the failure phase for many times, and a lot of the times we get into it's like a cycle that happens all over and over. But there's a way to get out of it and to not be in this failure phase for a long period of time. There's going to be moments, either it might be a week where you might go through this phase and you'll feel that, but it's it's something that you can get out of if you grab, all these symptoms real quick and start to take action, right? Contrary to the decisions that are making you live in this phase, right? Consistently. So that's the failure phase, guys. And honestly, with failure realities is every trader experiences this. It's a normal progression. But here is one of the most important phases, guys, in the failure phase, because this right here is when two things happen. You either tap out or it puts you into the guiding moment in the rebuild phase. And this right here, guys, is where many people quit, and this is where the market humbles you. Okay, so don't feel fully terrible about this phase, but understand very well and start to take a step back and try to observe everything that's going on and allow yourself to be taught. You know, so this is very important here, guys. Uh, this is the moment where you either decide to quit or move forward, right? So this is one of the realities that happens in the failure phase. Now, phase four is the rebuild phase. All right. So the rebuild phase, guys, is the moment where we lock back in. This is the moment where everything changes in our mindset. Not always in our portfolio, right? That happens later on as we are consistent with these habits, right? But the rebuild phase is scaling back in size. Okay. Nobody nobody wants to do this. Nobody wants to trade with two contracts again. Nobody wants to trade with five contracts again. All you want to see is 20, 30, 50 contracts. You want a full port. Nobody wants to do this. But this is important. All right. Returning back to the basics. All right. What did you do in the beginning? All right. You woke up an hour, 30 minutes before the market opened and start to analyze important key zones. Read through the news on what's going on. What are some meetings that are going to be going on? What are some data releases that are going to happen throughout the day? All right. Studying charts again. When was the last time we sat back and started to analyze, key zones and, not just with just one ticker, but throughout, like SPY, QQQ, IWM, Tesla, the tech sector, and the chips, right? So, when was the last time we started to actually sit back and look at the trends, right? So that's important. We can't just show up and have no, you know, uh, we're just showing up and we're just reacting to what's going to be happening for the day once the market opens, but have no context of what happened last week, last month, or last year. So, how are we going to collect data, right, and have convictions in these setups? Rebuilding discipline. All right. Remember the rules they used to have when you didn't trade before 10 a.m. All right. If you found more success there, well, then go back to it. All right. Or even try it, because either way, the market's open for 8 hours. So what is a big deal? Trading before trading before 10 a.m. or trading after, or what's the big deal? All right, you're not missing out on much. You can definitely catch even probably better setups majority of the times if you wait until 10 a.m. All right. We're getting clarity. That's what happens when we start to implement these habits. You should regain clarity, and this is when things start to be at ease, and we start to take calculated and appropriate decisions, guys. Long-term consistency grows here. This is the moment when we start to see some growth, and we start to feel satisfied with our decision making. It's not about losses or wins, you guys, but it's about our performance, in these trades, right? Because if you took a loss, but if you took an appropriate loss, then you're gonna feel pretty satisfied, right? Believe it or not. No matter the amount, the dollar amount, but it's that you stopped out when you said you were gonna stop out if the trade went against you. You're gonna feel pretty good about it. So that's a very important thing to understand, guys. And this is how we break the cycle, guys. I'm gonna finish off with this, and you have to reset your expectations. Okay. The issue is that a lot of us are just trying to get rich quick. We're just trying to hit these home runs and call it a day or a week. And in all honesty, fellas, this is not something that is very good to embrace. It's great to have high expectations and have big goals. You have to understand that there's another thing that you really have to embrace, and that's the process. Okay, you have to embrace the process and embrace the journey and the struggles. Okay, so you have to reset your expectations and have a short-term goal, and allow that to be completed and live throughout that and allow that to play out for you to start hitting the next levels as you go. Another thing is stop comparing yourself to others. All right, we have a lot of Discord communities, influencers, and people on social media that are posting these wins and such, and we want to make those gains in a day like they did, right? But it's very, very delusional, fellas, for one to think that I'm going to get the same exact results trading when I've only been in this game for 3 years, 2 years, compared to the guy that's been in this game for 12 years, 10 years. Okay? So, don't beat yourself up if you're not a millionaire within a year or 2 years or 3 years. That's not being realistic, guys. Okay? Just because you see these guys that are, posting these big wins and they have these big Discord communities and such, uh, you start to get more clarity and start to respect your journey when you stop comparing yourselves to them. Okay, you can't compare your chapter 3 to somebody's chapter 20. All right, so understand that. Another thing is trust your own growth timeline. Okay, this is the same thing with stop comparing yourselves to others. Okay, so just trust your own growth timeline. Respect your journey. Respect and embrace the journey. All right, and accept that setbacks are lessons. Okay, when you enter these moments and these phases of either failure, um, and just struggles and all this, confusion and frustration, understand, fellas, that these are the moments. These are the most powerful moments for you to actually sit back and try to find the lessons that the market is trying to teach you, or the lessons that you need to understand about yourself. All right, the information that you need to collect of your mind, your uh, your habits and such, and things that you need to work on to be able to actually see different results there, fellas. All right, so here's just some psychology tools, and there's 5 of them. So there's the first one is focus on risk per trade. All right, focusing on risk per trade allows you to get into trades more comfortably because you know the outcome. All right, one of the things that a lot of us are, addicted to is certainty. We want to know, we want to be certain about everything, right? We want to get in trades and be like, no, we know this is gonna be a winner. We know this is gonna be a loser. So we want to know the outcome before we get in. But unfortunately, in this game, we cannot take we cannot always know what's exactly going to happen, but we can take, the best setup for in that moment. So this will give us a lot more comfort when we start to, you know, focus on how much we're going to risk, because that is going to give us the ability to be able to get in trades more comfortably with more ease and allow them to play out, and not allowing our emotions to get in the way in these moments. Number 2 is only trade A plus setups. You know those A plus setups. All right, every experienced trader should know what an A plus setup is. Okay, key levels, above VWAP, retest, pre-market high retest, pre-market low retest, flushes after the rejection. Okay, you know these setups. Now, every time you take a loss, majority of the times, if you look at it correctly, it was an A plus setup. It was not an A plus setup. So we need to focus and get back on these A plus setups. All right. Journal emotions and outcomes. All right. Now, I know I'm gonna lose a lot of you guys here. Journaling emotions. For me, it's a little bit. This is just something I've heard, and I've collected this information from other people. Journaling emotions, if something that you want to do, you can go ahead and do it. Me personally, it's just something that I don't really do. But what you should do is collect data. You have to collect entries and exits. That'll be the best thing that you can do, because if you don't have any data that's been collected, how are you going to be able to know what to sharpen? How are you going to be able to know what to work on and such, or what you did good or what you did wrong, right? So it's very important to start journaling your trades, whether it be posting them on Discord, Twitter, or writing them down in a notebook. Like, you need to have some form of data collected. Practice watching SPY movement. All right. Whatever ticker that you trade, or however you trade, start to get more screen time. All right. That's going to allow you to develop price action experience, and also, um, pattern recognition. So you'll have all this information. You'll consume all this data from past performance to be able to know how this ticker performs in certain conditions. So it's very important. All right, and build confidence through repetition. As you start to repeat, the good habits, the things that work, right? That's when your confidence will start to build, fellas. All right. So this is a very short video. I just wanted to run through things quickly, just to help you guys identify which phase you're in, and allow yourselves to get into the guiding moment and the rebuild phase to start to see a change in your journey, fellas. Uh, this is something that you really have to dedicate yourself in. You cannot get rich quick. It doesn't exist, right? And if you do, fast money, it's just a ticking time bomb for you to just take a big hit or you to lose it all. So respect the game, respect the journey, and I wish you all the best. And um, if you want more of these videos, I'm actually releasing a technical side of this pathway to profitability. I will be on the charts, and I'll be showing you guys my approach in the markets, what I'm watching for, and strategies that you can start to implement in your trading. So if you guys want that, make sure to leave a like, subscribe, and comment below if you have any feedback. Let me know, and I'll see you guys on the next.